So something that you probably noticed is there's a lot more ads out there for mortgage refinances. And the reason for that is home values are up. For the first time in many years, home values are increased to a spot where people have equity. There is a margin or difference between how much they owe and how much their home is worth. So that creates an opportunity to refinance to a place to potentially get a lower rate, get rid of PMI, take out some cash to do some debt consolidation, take out some cash to do some renovations, which is really cool. But should you refinance? Well, there is a plethora of things that should be analyzed to determine if a refinance is good. And there's a couple of these things that you can have handy to determine if a refinance is good are the following. One is your mortgage statement. Your current mortgage statement can be given to a mortgage advisor to see exactly what your current rate is, what your current balance is, and then also what you're paying in taxes and insurance to determine if refinancing to something new or different is going to genuinely be better for you. In addition, trying to determine what your credit score is currently will help determine what interest rate you can get on the new refinance. Your credit score might have increased since the last time you got that mortgage, or maybe it went down since the last time you got that mortgage, and that can impact the interest rate that you have. So understanding what your current situation is, what your credit score is, and understanding what you pay in your homeowner's insurance, or even what the original balance of the loan was when you first obtain it, can help find out if a refinance is a good idea. Look, it sounds like a lot of fun to go and take a cash out loan to maybe even get $10,000 or $15,000 out to do some renovations to your home. But if your current balance is $200,000 and you've got a great rate on it, and you refinance to get that $10,000 or $15,000, it may not make sense to raise your interest rate of the $200,000 up to maybe a higher rate just to get the $10,000 or $15,000 out. So having someone who genuinely cares about your situation to analyze exactly where you're at to see if a refinance is in your best interest is something you should be doing. We wrote a blog about this at moneywellrooted.com. You can scroll down to the bottom, the blog section. I'll also put it in the comments to this video. But this will tell you a little bit more about what needs to be looked at in order to see if a refinance is in your best interest and if it's a good idea. We'd love to help you with that. Some of our mortgage advisors can look at that